What do you see in the figures this morning?
The figures are pretty clean across the board, John. Fixed income coming in with a whopping 49% jump. That is much bigger than we saw from JP Morgan. But equities trading is a little bit light. There are going to be some questions about that. We saw them posting a return on equity that was through the roof, 17.5%. May I remind you that Goldman this year earlier had set out a goal to boost return on equity beyond 13% over the next 5 years. There were a lot of concerns about that when this pandemic started, but they are showing that they can take advantage of this tough time.
And the stock pops here. We'll get that up there, 2.6% for those of you on Bloomberg Radio. We welcome all of you. Sonali, the headcount that comes on, and I looked at expenses, and, they still got headcount increased by 5% as well. The age-old question, Sonali, is this really a bank? I don't buy it. They're not giving out toasters at Christmas.
I wouldn't get too excited about the headcount, Tom. Those were campus hires, they had said. So we might see that headcount go down over the next couple of years, or Goldman at least moving some people to lower cost locations. We know some job cuts are already coming from Goldman. We know that they are trying to make their partner ranks much more exclusive. So the cost cutting story, yes, expenses increase, but they also want to stay competitive and compete. You have Goldman, you have JP Morgan bringing people back into the office at this time. They want to gain share.
You see the shade Sonali just threw me there? Like she basically said, Tom, you don't know what you're talking about?
Well,
she basically told you were wrong in a really diplomatic and polite way.
I will say, John, you picked up on a really important point here. The idea that Goldman's chief executive officer said that clients are beginning to emerge from the pandemic economy. Sonali, it seems like this is even rosier than what we have seen and heard from the other banks that have reported so far. Is that the case?
It is rosy. And, we have Morgan Stanley tomorrow. We heard from James Gorman last week. He felt rosy enough about the economy to make one of the biggest deals since the financial crisis, even when the Fed is trying to constrain some capital. Lisa, I know you love debt underwriting, but equities underwriting also going through the roof here, and people are going to public markets again with at least optimism in the markets, if not the economy.
You didn't answer my question, Sonali. Is this thing a bank? I just don't buy it. I get they're doing trading, they're doing fixed income, they're doing equities, but can you actually compare Goldman Sachs to JP Morgan or Bank of America?
No, you certainly can't, but at the same time, their consumer business is clocking in more than $1 billion, $1.5 billion in revenue. So they are growing it. They are getting deposits. People want to go digital. But if anybody has a markets account, you know that interest rate is falling constantly. So they are trying to appeal to consumers with this credit card. It's working. It's working on a much smaller scale than you see from the much bigger banks, and they have competition there to contend with too.
We're lucky to have a lot of students who listen and watch this program. And Tom, I think they've just learned that what defines whether you are a bank or not is whether you receive a toaster. Apparently that's it. And I'm so pleased that Sonali didn't answer the question. Sonali, the cheat guide yesterday was to wait for the earnings call. We're waiting for the earnings call for two banks this morning. What happened yesterday for JP Morgan, for Citi, the lessons learned, and what you're looking out for a little bit later this morning?
Listen, there are two things here, because you're right. At first it looks really rosy, but then people listen to the calls and realize they are going to be seeing pain from the banks through the end of next year, at least. And if that's the case, what are the banks going to hang their hat on when it comes to growth in different business lines? Even with Goldman and the consumer, there are troubles in the consumer. And so are they seeing the ability to rake in a lot of revenue from businesses that are not Wall Street businesses?